Welcome to the Bitcoin Business Podcast put on by Sovereign. I'm your host, Brandon Karpeles. Today, I have with me a guest who has been in the Bitcoin space for quite a while, is pretty well known, has written some pretty prolific pieces, has given some great financial analysis and everything. And so we don't touch too much on that on this podcast, but I think we're going to get into that a little bit today, just because Sam Callahan's here, and he's this is what he's inundated with. This is what he knows best. So we'll talk a little bit about that at some point here. But first of all, Sam, thanks for joining.
Yeah, thanks for having me on.
Yeah, awesome.
Appreciate it.
And so, for some of our listeners who may not know, we have some newcomers to the space, and we have a lot of people in the circular economy, homesteading space as well, who
Cool.
maybe don't hear some of the other voices, sort of the macro stuff in this space. And so, why don't you talk a little bit about how you got to Bitcoin. We don't have to spend a ton of time on that, but I actually do like hearing people's stories because everyone comes at it from a different angle, which is actually fascinating to me. Is almost everyone got to Bitcoin some way somehow, but like the story is never the same. And so, well, why don't you tell us a little bit about that? What you were doing, and what you're doing now.
Yeah, like you said, everyone's Bitcoin journey is unique. Mine's a little unconventional, I guess you could say, but really it came from a place of I had a fascination with financial history. So I kind of geeked out on learning about the history of central banking, about the history of money. And this was long before even Bitcoin was invented. This was before 2009. I really got fascinated during the global financial crisis when I was studying what happened there. Why did these big banks get bailed out? What's TARP? And I just went down this huge rabbit hole. I came out of it kind of a gold bug, maybe like a lot of people. Sound money advocate, Austrian economics, and was just really into investing. But then I studied biology. I studied physics in at university, and then when I got a doctorate in sports physical therapy, I traveled around the world working with professional athletes and different teams, basically developing algorithms to reduce injury risk. So back in those times, really, sports medicine was reactive. So when people got hurt, tore their ACL, it was just like, how do we get them back on the field? It wasn't about how to prevent the injuries from happening in the first place. And so developing algorithms to help reduce the injury risk, help those teams keep their star players on the field, sell tickets, and all that good stuff.
Was
So I
that
did that for,
Was that successful? Like I remember
oh, yeah.
I remember I used to listen to a lot of sports talk radio back in the day.
Oh, yeah.
And 670 The Score. I know you're a Chicago native, so I'm sure you're familiar. Um, I used to listen to a ton, and I remember them talking about this, and this technology was coming out, and it was getting introduced. But then I kind of didn't hear anything more about it. So maybe it became like a proprietary secret based on each club or organization. What actually ended up becoming of that? I have no idea.
Well, I mean, the short answer is it's if a team's not doing it, they're almost negligent at this point. It's extremely successful in terms of just being objective and measuring athletes' risk. Essentially, that's what you're doing. You're basically stratifying risk in these different players, which are kind of assets for these teams, right? They're the most valuable assets. I was speaking of Chicago sports. I was inspired by Derrick Rose. I was a huge Derrick Rose fan.
We all were.
Unfortunately,
Yeah.
his amazing career was derailed by injuries, and I just thought that's so sad. If we could have prevented something like that from happening, a lot of those injuries are non-contact injuries. They just kind of moving the wrong way, and can we reduce that? So if you implement a program like that, it usually reduced injury risk by or incidence by about 25%, which is very meaningful.
What
And so,
sorry, what was entailed in it? Was it nutrition? Was it, I mean, I know famously
yeah,
Derrick Rose had
very holistic. Yeah.
terrible nutrition. Yeah. Yeah. Yeah.
Nutrition was a part of it. I mean, it was a lot of objective measures. So looking at flexibility, strength, core stability. It's just funny, if you're not trained in this stuff, if you watch two athletes run, I think most people could say like that guy's moving better than that guy, subjectively. But can we do it objectively and then put up a plan in place to actually improve their way they move so that they reduce the risk of these catastrophic injuries like an ACL tear? And ACL tears are terrible. It's basically a coin flip if the athlete's going to return back to their prior level of performance. And so you got to prevent it from happening because then you have situations like Derrick Rose where there's so much lost opportunity with that one. But yeah, that's what I did, and it was fascinating work. But when I was traveling to these teams and working with these athletes, I was always reading investing books on the plane, and just I was fascinated with history. That love and passion never stopped. And then I just discovered Bitcoin very organically through that. I think I read some article, and it was an article about Satoshi Nakamoto, and it just captivated me right from the start. And I was like, this has to be fake. It seems like a movie. Like there's this person that invented this digital money, but nobody knows who they are. And I just thought it was fascinating. And then, once I started reading, I bought a book. I remember Digital Gold by Nathaniel Popper was a really important book for me. It was one of the only Bitcoin books at the time. It's still an amazing historical recollection of the early years of Bitcoin and very well written. And once I read that, I was just immediately hooked, and I never stopped. I just kept reading and reading and reading, and like every other Bitcoiner, just got the orange pill, dove straight in, and it became an obsession, to be honest with you. And then after years and years of that, I realized I just want to work in the space. I want to help advocate for Bitcoin. I thought it was the most important use of my time to help spread the adoption of Bitcoin and teach people about why it's important, about how it could fix some of these things. I mean, I'm wearing the shirt, fix the money. I really believe that. Fix the money, fix the world. And now it's been a crazy ride. Been a roller coaster. Been working in Bitcoin for over 5 years now, and through different roles throughout the ecosystem, which we could go into more detail. But it's been the best part about Bitcoin is meeting the people in Bitcoin and the network, and just feeling inspired by some of the smartest people in the world. I think I just love Bitcoiners, and being on this joint mission to push sound money and digital sound money. It's been the journey of a lifetime. So that's me. That's me in a nutshell.
No, it's so true. There is nothing better than talking to Bitcoiners. So I love doing this podcast, and I, we definitely need to put some more effort into it and some more time into it. But it's just kind of like, honestly, I just love having a frank conversation with another Bitcoiner for an hour plus,
Oh
and
yeah.
getting to talk to them, pick their brains, hear their story, what they're doing, and everyone is doing something so much different. Like outside of the internal rips, I think we've done a couple of them here, but outside of it, everyone's just doing. Some guys raising cows and sheep and selling that, and then someone else is raising cows and they're selling ghee. Someone else is making wine. It's just someone's working at a well, like you will get into what you're doing, and we've had people on here that are working at rewards companies and all this stuff. It's just so cool to hear everything that everyone's building. But anyways, that was an aside. As you said, the history of money, I got sucked into that too. I had the same passion as you. I just couldn't stop reading, The Creature from Jekyll Island, and The Secrets of the Federal Reserve, and just and Safe's book. Obviously, the first 6 or 7 chapters are all about the history of money and digging into
Mhm.
that. I actually had a friend go to a garage sale. He found some book. I think he paid like $1 for it, and it's a hardback book from, I think it's from like 10 years ago, and it's a history of every single note and coin that the US government has ever had. And I just leave that out of my coffee book to this day, and I read through that thing all the time. It's just crazy, all the different types of money and everything we did. And this the amount of human engineering that went into terrible money, and then hundreds of years later, now we have this human engineering that's made the perfect money. And it's just mind-blowing when it's like we've been trying to solve this problem for hundreds. actually thousands of years. And it's like, wow, now we're living in a time 17 years ago that the solution to all of this was introduced to the world. And with that framing, it is kind of mind blowing. So along those lines, a big part of that change and coming to this realization, we're very early to this, and part of the calling, the vocation, if you will, of going down the Bitcoin rabbit hole, understanding it, and feeling like you need to do something in it is educating other people, telling them about it, helping them understand what you've come to understand. So recently, I know you've joined Orange BTC, and that's OAR. Hold on. Oh, and now I'm screwing up the pot pan. ORANJE BTC. And
Yep.
so why don't you guys are doing a lot there, and I've definitely given some BTC treasury companies my fair share of guff on this, but you guys are actually running a business and actually are doing something. And so why don't you guys talk about what you're doing and how you're bringing the word of Bitcoin to people?
Yeah, yeah. Orange BTC is we're the largest Bitcoin treasury company in Latin America. So we currently have 3,722 Bitcoin. We capitalized our Bitcoin, our company on Bitcoin, and we went live on the B3 stock exchange in Brazil in October. And so October 7th, and then we had the October 10th liquidation event. And so the market conditions are something we can't control. But we are in this for the long term, and our mission is to accelerate Bitcoin adoption in Brazil and then Latin America more broadly, a region that has been really decimated by currency debasement, financial instability, capital controls, all the things that we think Bitcoin solves. This is the region that actually needs Bitcoin. And, I'd say they're a few years behind Bitcoin in terms of the adoption, in terms of the understanding, which provides an opportunity for us to provide that Bitcoin education, to be a leader, to provide Bitcoin products and services. And so the way we went public was actually a reverse merger with an education company that had a lot of infrastructure that sells online courses as well as in-person courses, almost like an ACT, SAT in that region. So it's basically mandatory courses. If a student wants to go to university in Brazil, they have to take these courses. And so, yes, that generates revenue for us, and it aligns with our goal of educating the market. But we're going to transform that over time into more Bitcoin curriculum, Bitcoin courses, and be that voice of Bitcoin in that region. And so that's part of the core business. Now there's a lot of different coals in the fire for us as well. So we have a lot of plans in place to develop different Bitcoin products, different services that just don't exist in that market right now. This isn't the United States where we've had a lot of this maturation that's occurred over the last 5 years. There's a lot of local startups that could benefit from a large partner like us. There's companies abroad that are looking to expand in the region, that are looking for a strategic partnership with a company that can navigate the regulatory complexities and have the different relationships that are required to launch different products and services. And so there's a lot of opportunity for us. And right now, we're focused on our core mandate, which is to accumulate Bitcoin for our Bitcoin treasury, as well as to educate the market. And as we explore the different opportunities in front of us to expand different lines of business. So, which early in our journey, we've only been public for 4 months now, but it's exciting times. I mean, I am overwhelmed by the support in the local region from asset managers to large financial institutions to family offices to other institutional investors who are excited to finally get into Bitcoin. I mean, it really is. It does feel like, I lived through the 2020, 2021, 2022 years in the United States. It feels similar where it's just there's an excitement and a feeling like, oh my gosh, we need to go into this with conviction. We need to go into this with purpose. Bitcoin's not going away, and some of these institutions, I think, feel a little bit like behind the ball a little bit, and we're there to be their partner and help them lead the way there. So it's an exciting time for Orange BTC. We can get into it more, But I'm just really thrilled to be here. It's a great team, and I haven't been more fulfilled in a role probably in my whole professional life. It's been amazing.
It's awesome. I mean, I feel the same way joining Sovereign here, and it's funny you mentioned that the everyone's excited there, and I feel like everyone actually working in the Bitcoin space, actually doing things, actually building things, seeing it is excited, and then it's all the people who sit on Twitter all day and just stare at charts who are couldn't be more bearish or beat down or upset, and it's like, guys, there is so much building going on, there is so much adoption happening right now. Like, if you have to stare at a chart all day and this is affecting your mood in your life, like, go sell some Bitcoin. Sorry, like, go do something productive with your life, and
Some grass.
yeah, exactly. Yeah, go touch some grass, go do something productive, but just being agitated all day, like, or talk to people in the ecosystem. Like, there is so much going on. So with that, are you guys building out programs yourself? Are you partnering with anyone? How does sort of the curriculum look for what you guys are doing?
Yeah, we're building that out internally. I mean, I've worked in Bitcoin. I was a Bitcoin analyst before, head of research roles. Like, that's kind of my bread and butter. So as the director of strategy and research, my role is kind of twofold. I work on the treasury committee, and I'm the director of strategy for our treasury and how do we accumulate more Bitcoin. That's finding different ways to make that Bitcoin productive. That's accessing capital markets to accumulate more Bitcoin. That's considering different ways, leverage to acquire more Bitcoin if the terms are right. That's that side of things. And there's the research side of things where I work with a few other people on the team to develop Bitcoin educational content across all medias, really. And so the course is currently in the works. We have different partnerships in place with different companies in the region, education companies, and we just want to be the leader. So we want to create multiple courses over time, and just pump out Bitcoin content. I mean, it's amazing because there's just we share a chart that maybe a lot of people in the United States have seen, that's popular in Bitcoin or in the Bitcoin community. That's been like, let's say, like the total adjustable market chart that maybe you're familiar with,
Sure,
Jesse Myers, right?
sure. Yep,
Y-
classic.
If
Yeah,
we, if we, if we, yeah, if we take that and then we um, translate it to Portuguese, it's like a lot of people just haven't seen that, and it's like these older charts or these things that have been circulating around in the United States just hasn't been translated into Portuguese. And obviously, there's some graphics and some charts that really put a good framing on Bitcoin. And it's important to share those things and resurface really good content, but in Portuguese. And it does really well, right? The response is just like when those charts first came in the United States. The response is like, "Wow, I've never thought of it like this," But they don't speak English, so we got to translate it into Portuguese. And
yeah.
so there's different partnering with other Bitcoin content creators to help resurface their old content. Because like when we got into Bitcoin, the Bitcoin education and the content was decentralized in a way. It was distributed across blog posts, podcasts, Twitter threads. There's a lot of great content that gets buried over time. And if you're new to Bitcoin and coming to it, you might not know about this amazing blog post by Gigi in 2021, or this amazing thread by, Turtle Meester, or just, Parker Lewis's blog post. So these things I think need to be resurfaced because they're extremely evergreen and they're amazing educational resources. So it's fun to think about potentially partnering with some of these great Bitcoiners. And I just named those names. We haven't reached out to them, but like that's the idea, is like translating old Bitcoin content, resurfacing it in Portuguese for these people, and just taking that amazing community's work and resurfacing it, because I don't want it to be buried. I think that deserves to get more and more eyeballs. And just because it was written 4 years ago doesn't mean that it's not as relevant and as it ever has been today, given the macro environment that we're in.
Well, that's the best content, right? Is the stuff that makes sense 4 years from now, 5 years from now, 10 years from now. That's
Yeah.
that was earlier this year or last year. I can't believe it's 2026. Last year, earlier last year, Pierre Rochard and Michael Goldstein, Bitstein, went back and read the old articles from the Satoshi Nakamoto Institute.
Yeah, yeah.
And I would say 95% of the content held up just extraordinarily well. It was true then in 2013 or 2012 or 2014, and it's true today. And so even resurfacing that, I had read many of those articles, Pierre Rochard's uh, famous article about the dollar arbitrage, and of course everyone's a scammer from Bitstein and stuff like that. There's some standout ones, but even going back, and they read some articles by Nick Szabo and some other guys that I had never, I didn't read them, and it was like wow. And that like re-energized me. I got to learn some things and think about stuff from a different standpoint, and I been looking at Bitcoin content for 7 years, and I speak English. So, God only knows someone who's just getting into Bitcoin doesn't speak English to have access to those. And that's just one example. As you said, there's tons of this, Bitcoin is Time by Gigi. I don't know if that's the one you were referencing, but like, I mean, that's an all time.
I love all of Gigi's
Yeah, I
stuff,
do
but
too.
that
But
is one of my favorites.
yeah,
That is one of my favorites.
like that absolutely should be translated so that everyone can read it, because it does stand the test of time. And we never even think about that in the United States. You're just like, oh, well, the rest of the world speaks English, right? They can read this. It's the universal language. Come on. And the reality is actually most people don't. So
Yeah, and big shout out to the Satoshi Nakamoto Institute. They were really important in my journey, just building that out and being that resource for me. But that's what I want to do. It's just pushing things forward. Paying it forward. Trying to make Bitcoin as accessible as possible. And so that's, I think, one of the missions of Orange BTC in Latin America. It's both making it accessible in terms of content and educational resources so people can better wrap their heads around Bitcoin, and why it's important, why it can protect their savings, why it's useful technology, as well as delivering Bitcoin backed securities that improve access because there's large pools of capital in Brazil that can't buy spot Bitcoin. And that's what strategy Michael Saylor talk about all the time. There's $100 trillion of capital that's currently mandated to equity or bonds that can't buy spot Bitcoin. And so the same dynamic exists in Brazil, where there's currently regulatory restrictions for pension funds, for insurance companies, for other big pools of capital that can't buy spot Bitcoin. And there's also just not many ways to gain exposure through the public equity markets, Bitcoin period. So in the United States, there's over 50 plus ways to get exposure to Bitcoin. There's the Coinbase, there's Block, there's all the miners, there's all the ETFs, there's all kinds of different equities you can allocate to get exposure, but that doesn't exist in Brazil and Latin America more broadly. There's basically three ways to get exposure. There's an ETF, which is a little more expensive than the ones that we have in the United States. There's Orange BTC, and then there's Meilus, which is a smaller Bitcoin treasury company in Brazil as well, that does cashback rewards and things like that. So that's it. There's three, and so there's limited options available for these large pools of capital to get exposure to Bitcoin. And we think everybody should get exposure to Bitcoin. I mean, my argument is what's better if you have a pension fund or any portfolio? Is it no Bitcoin, or is it Bitcoin exposure to some kind of equity product, some kind of debt product that is backed by Bitcoin? I would say the latter because everything's good with a little touch of Bitcoin in it. Everything's better with a touch of Bitcoin in it.
yeah, well,
So
sorry,
yeah.
go ahead. Yeah.
No, I was just gonna say that's like making Bitcoin more accessible is a core mission of Orange BTC for all those different reasons. Yeah.
Yeah, I mean, when you are actually unable to purchase spot Bitcoin, I mean, you unfortunately are relegated to something else. And, hopefully
Yep.
15, 20 years from now, that's not the case, or maybe even 5 to 10 years. But in this sort of interim period, it is what it is. And at the end of the day, if you are, running a profitable business and putting that money into Bitcoin and people can get exposure to that and that's their only way, um, why deny people that, something that we have a privilege here in the US or, sort of the Western world or even just other parts of the world where they have access to spot BTC in some of these funds and whatever. So along those
Yeah, I
lines,
mean, when you've worked in with institutional investors like pension funds, I mean, when you work in that, when you've been in that world and you've talked and had those conversations, I mean, even a lot of them, they like can't even buy like gold,
yeah,
right? It's like it's not even Bitcoin. It's like it's just how the market evolved over decades and decades and decades, where you have these like siloed allocation buckets, and they have to fit specific mandates, and then it goes to investment committees, and it takes a long time for them to make any changes. And so I don't see that changing for a long time. I think there's going to be always uh, capital that's kind of restricted or mandated to equity, to debt, or any specific asset classes. And I hope it opens up more over time as well. But we're in this time period where there is like uh, there's a component here where the earlier you allocate to Bitcoin, the better. The earlier you get exposure, the better, as you benefit from Bitcoin's adoption and price appreciation over time. And so getting exposure, especially in this world where there really isn't that many alternative assets that provide good diversification in a portfolio, that move differently, that have different risk factors, different drivers of the price. And Bitcoin over long periods of time has shown very low correlation with pretty much every other asset class because it is driven by different things. It is unique. And that is very valuable to anybody who's managing capital, who's managing the portfolio. I mean, diversification is the name of the game. And unfortunately, when you go into these periods of more inflation, more persistent inflation, and we could talk about why, some of the drivers behind that. But when you're in these periods, bonds and stocks no longer move differently with one another. And that's important because a lot of modern portfolio theory is based on this belief or this relationship between bonds and stocks, where, when stocks fall, bond yields fall. And so bond prices rise. And so bonds act as this shock absorber in a portfolio. And that helps reduce volatility. And so your portfolio doesn't go all the way down when equities go down. You have that shock absorber. And that's how portfolios were crafted over the last 20, 30 years. You had that negative correlation between bonds and stocks, extremely important. But when you look out throughout history in inflationary periods, that relationship flips positive. And that's what we've experienced over the last 5 years, where bonds and stocks are moving together. So there was multiple years, I think in 2022, where stocks and bonds both fell together. It was like the worst since the Civil War in terms of returns. That will keep portfolio managers up at night, right? Because then they don't have that protection anymore. And so they seek alternative assets that provide that. I think that's part of the bid behind gold, right? That's
100%.
part of the bid behind Bitcoin. And so that'll only become increasingly more important because I think we're in this period of long-term structural inflationary drivers. And I think that relationship is going to remain positive between bonds and stocks. And so there's going to be more and more demand for alternative assets from these institutional investors. And so going back to what I was saying before in terms of them being restricted from owning these assets, I hope that changes because I desperately want the pensioners of the world and their clients who they manage the money on their behalf. I want them to be protected from this environment. I want their savings to be better managed. And so I hope that these institutional investors increasingly allocate to alternative assets like Bitcoin, like even gold or these ones, so they have more protection.
Yeah, you said over time we've evolved. I would say over time we've devolved into bureaucratic regulatory silos and everything that you have to throw things in. But hopefully we re-evolve
Hmm.
back to actually being able to have decisions over your own capital and actually being allowed to participate in a free market. What a crazy idea. But anyways, along the lines, oh, you're talking, speaking of institutional investors, and I'm curious the people you're talking to down in Brazil. I know you mentioned you're working with some of them. Are they coming to you guys for education about Bitcoin? Are they, asking how could we buy Bitcoin, spot Bitcoin? What are they kind of reaching out to you guys with?
Everything, everything like it's just we are there, and these are large, very respected financial institutions. Brazil has a very robust financial sector and banking sector, and so that's a huge part of their economy. So these are sophisticated people. But just like any institution, I mean, we're witnessing in the United States over the last, I'd say 18 months or 24 months, uh, these large financial, the Wall Streets of the Wall Street kind of embracing Bitcoin, right? But there's a learning curve, and so reached out to experts in the United States, and that's exactly what's happening in Brazil now too. I mean, they're just trying to learn about this new asset classes. They're trying to challenge their older notions around it. You know that it's going to be a bubble. You know, just the same thing. And they're realizing, oh, this is for real. This technology is going to be around for a long time, and we have to have some kind of strategy. Maybe they're seeing a lot of client demand for it, a lot of questions from clients. They need to be better understand it themselves so that they can educate their clients and make good decisions on their behalf. And so they're looking for, experts, subject experts on the subject, and that's where Orange BTC can come in because our team is full of people who have worked in Bitcoin for a long time, who have worked in education for a long time. Um, like our CFO actually ran a public education company in Brazil for over a decade, and so this is what we do. And so when we talk about how we improve accessibility, maybe they're thinking about offering their own products and services where there's an advisor to be with them and be like, okay, this makes sense. This makes sense. And so, it's just very early innings. I mean, you said it's early innings of Bitcoin adoption, which is totally true. It's even earlier in these regions. And what's interesting is that like crypto adoption there is extremely high. uh, it's one of the highest in the world. When you look at Chainalysis, um, uh, global crypto adoption index, which is probably the best report annually on adoption geographically, and they've been doing it for a number of years, and they have different categories, DeFi, stable coins, crypto, Bitcoin, and Brazil was the only country in the top 5 of every single category. And so it's not to say that the adoption is not there. It's actually quite the opposite, where they have very innovative financial technology there, and a lot of people use wallets, stablecoin adoptions uh, through the roof there. And so we're trying to say, okay, you guys already got stable coins. You guys understand the benefits. You guys are using this new technology for remittances, for all different kinds of things. Bitcoin is part of that. And you guys need Bitcoin more for long-term savings. Given the problems that you've had with currency debasement over the years, it's not really that hard to sell people on it. It's just that they just don't know about it, and they're scared of the volatility. And so it's the same thing that we went through in the United States of teaching people like, okay, volatility doesn't equal risk, right? It's just about position sizing. It's about, long-term holding. Here's, if you hold for at least 4 or 5 years, here's what your returns have looked like, and here's what your downside's like. And so just teaching them about these things that seem basic to Bitcoiners in the United States. But it's meaningful in Brazil. And it's very meaningful because they really need it. And so, how do you manage the volatility? Why? I think volatility is one of these things. Again, if we go back to traditional finance, people look at volatility and they see it as risk, and I just disagree with that completely. I think real risk is underperforming the rate of monetary debasement, so losing in real terms, and then also permanent capital loss, right? That those are the two real risks in life. Volatility is just a matter of managing your position size and determining your short-term cash flow needs and your long-term investment goals. And so changing that mindset around that is hard for people at first, but I mean, once you hold Bitcoin for a longer period of time, you start to get completely numb to the volatility, right? I'm sure you experienced that too.
Yeah. I
And
finally
so, like,
Yeah, sorry, go ahead.
yeah,
No, 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 go.
no, no, that's kind of a tangent, but we're just doing all that work. Like, we're just having those conversations nonstop with both institutional investors, and then we're putting on events. So we Orange BTC did the first Bitcoin focused institutional event in all of Brazil, in the history of Brazil. So that's like that gives you a sense of where things are. It's like they've never had an event strictly dedicated to Bitcoin for institutional investors. And we were amazed by the turnout and the excitement because
It's
it
awesome.
never happened before.
Yeah.
It's and so we had Sailor like call in, and a lot of people like heard Sailor for the first time, and they were just kind of like, "Wow, that was crazy. That was so good," because, like, they haven't heard his awesome analogies and things like that, and all. They haven't been exposed to it, and so we're just being that conduit for them and helping, you know, spread the orange light
Yeah,
in
put the
Brazil.
bright orange light.
Yeah.
Yeah.
Yeah,
I
exactly.
I finally got my dad over the volatility real rate of return hump this year, and it was like the most
Nice.
it finally clicked for him. I've been telling him forever and ever, and um we were on a fishing trip, and we were sitting down having breakfast, and he was saying, so that there was one other guy with us. He was asking about treasuries, stocks, and all this stuff. And I was telling him about Bitcoin, and got him set up with a wallet and stuff. And my dad was like, I know what you're going to say. He's like, you're going to say holding all these other assets is riskier than holding Bitcoin because they're not outperforming inflation. And
Yeah.
I was like, yes, Dad. Yes. Thank you.
Yeah.
And
That's
so,
what
yeah,
I had the same conversation with my dad.
yeah. And so
It took
sometimes
a while, but
yeah,
yeah.
yeah, it takes
He
4 years.
it did. It took a while. But eventually they get it, but, like, I'm surprised people have such a hard time thinking in real terms, and it's so important nowadays. Like, you have to. Every single part of your returns should be thought of in real terms because of what we're going through in this environment of widespread currency debasement. Like, you have to, or else if you're not, you're losing. Like, that's why they were like, "Oh, what's that returning you, that bond or whatever?" It's 5%. I was like, "Oh, so you're losing."
Well, that's what I
Okay.
mean. People always say, oh gosh, the boomers, they bought their house for $50,000. Now it's worth like 800,000. And it's like, yes, that's true. However, if you actually price that in gold, like, they got destroyed. They got absolutely murdered. And so, and that's something like a house. That's like a real tangible good. Forget your actual currency or your bond, which for sure returned less than a piece of real estate. Um, and
Yeah, that's not even taking into
yeah,
account all the extra costs associated with the real estate, right?
yeah, it's crazy.
Maintenance,
And you're like, well,
taxes.
if you
Yep.
just held a harder money, you would have actually done so much. Your house, great. You have 800 grand now. Okay, you can go lever up. You can go take $500,000 out against your house and go on your Carnival cruise and go to the slot machines. But like, you could have taken out 1.5 million, but selling some gold if you had just done that. So it's like, it's even more pernicious. And I think that's a part of it, is that people are holding these other assets that like go up enough. And so it's like, you combine what you're earning. So like your wages, we all know the wages aren't keeping up with inflation. We all know that. So but you combine your wages with your asset appreciation, and you're like kind of around even. And so it like, you don't notice that you're getting financially slaughtered. Like if you would just held a harder money, a better asset, um, because you're sort of earning to like, you're basically the difference between your asset appreciation and the currency debasement is like sort of your earning. Like, so you kind of just
It's
tread
like you're
water
flat.
forever.
I mean, if
Yeah,
you're
right.
lucky, you're, like, flat, right? But
Yes.
you feel like you're winning.
But yes,
It's like an
exactly.
illusion.
Yes.
Illusion.
It's a
Um,
total illusion. Yeah. Um,
Yeah, yeah, it's like, how rich are you if your house is going up, but all your neighbors are going up at the same time? You know, if it's just everyone's just being lifted, but really it's the money that's losing purchasing power.
right.
That's the hard part that people can't understand.
Yeah.
Um,
And I think it is kind of hard to wrap your mind around that concept unless you're willing to like dedicate some serious time to think about that. Um, and maybe part of it too is like we just have it so easy in the West that we can get food anywhere for like we go get a meal for $4 somewhere, and we just have all
yeah,
these
there's def
luxuries and stuff works and
well, that's what keeps me going in terms of Bitcoin. I've always been attracted to Bitcoin because I felt like it was a rare opportunity to potentially make a good living and benefit from the adoption of a new technology, you know, but also I thought it helped the world at the same time, which I think is rare when you can actually build a career around something that you feel like truly is helping people and making the world a better place. You know, like the human rights angle, Alex Gladstein's work, like that always drove me and resonated with me. And even today, I mean, you see just like uh, what's going on in Iran,
yeah.
right? Or Venezuela, and currency debasement is so damaging. It's so destabilizing to a society. It's hard to really put into words. Like I actually recently came across a paper from the IMF that looked at major currency devaluations since 1971. And they chose 1971 because they said that's when the gold anchor was severed by Nixon. And that's when this free floating fiat currency experiment started. And since then, I mean, I think it's almost 200 major devaluations that have occurred. And that's not mostly in the past. Actually, they're like, actually, it's still over the last decade, there's been like 100. And they even said in the paper, major currency devaluations are some of the most destabilizing events that can happen to any society. It leads to increased poverty, increased crime, lower life expectancy. I mean, it's so terrible. And unfortunately, when you see Iran's currency right now drop off a cliff and now there's protests and there's violence, I mean, it's all connected. And hopefully, some people on the ground there have Bitcoin as the banking system's getting shut down to protect themselves because that's why it exists. You know, and there's nothing stopping every fiat currency from being mismanaged like that, unfortunately.
Yeah,
And there's weaker ones that you see, and you're like, oh, well, that can't happen to me, right? But it can
it's
because
going to. Yeah.
because these currencies aren't backed by anything and they're also managed by human beings with flaws. And so they might last a long time, but eventually the history of fiat currencies all end the same way. And it's just, prove me wrong. If go read the history yourself. And so that drives me because I don't think the enough people in the world, which is billions and billions of people who are at risk of major currency devaluations or currency debasement, have many solutions in front of them. And there's not that many solutions. And so Bitcoin is a solution. And it's what keeps me going. What keeps me driving because honestly, Bitcoin adoption, like you said, it's not anywhere close to where it's going to be, and there's still so much work that needs to be done. And so it's an honor to be a part of it. Just like I said, I want more people to have solutions and to have ways to protect themselves against this because I see what's coming and it's disconcerting.
My uncle is from Argentina. His whole family is still there, and I've kind of orange pilled. I would say I've like light orange pilled my aunt and uncle, but they have family back in Argentina, and they spend all this time. Hey, I can on the Strike app. I heard they can download it now. Can I send them U.S. dollars? And it's like, oh, like we can only send them USDT, and I just always say like, why don't you just send Bitcoin? Why don't you just have your I think it's his nephew. So why don't you just have your nephew spin up a wallet? You can send a Bitcoin, and this is all done immediately. But it's like, well, then he has to go to the Cuevas, and then he has to exchange it. It's, people want the dollars, and it's like, so I got to get the dollars to them. Some places don't take Tether; they want actual dollars, and so it's just like, to your point, there's this big quote unquote crypto adoption down there, and they've seen,
It's understandable though, right?
yeah, yeah,
You know,
of course it is. But
yeah.
it's just frustrating, and it's like Bitcoin really is the solution to all these things. That's kind of staring you right in the face. So
Yeah, we live in a dollarized world, and I think it's even gonna be more dollarized. I think we're in this period where the weaker currencies will fall off. Stable coins will help accelerate access to dollars. Dollars will continue to flow even more freely throughout the world, and it'll be easier than ever before to access, better fiat. And it has this illusion of stability, right, that we talked about, where relative to their local currencies, the dollar is like a stable coin. Yeah, it holds its value, it seemingly. But with an inflation rate of 2.7% a year, the dollar loses its value in about 25 years, half of its value in 25 years. Uh,
something like that. Yeah,
so
yeah, yeah.
yeah, something like that.
And
So I
that's
think it's 26.
2.7. So, and we all know what the
That's
real number
2.7.
is. Yeah,
That's the CPI, right?
right.
And so,
I think those
it's
I think those two numbers are transposed in the real number. So
probably,
yeah,
probably. But I just bring that up because they suffer the same problem. It's just that's not what their immediate needs are, right? They want something that holds value for the month so that they can pay their bills. And if they have any, leftover funds at the end of the month, hopefully for long-term savings, that's when they turn to Bitcoin. But I think we're gonna go in this world that's dollar Bitcoin eventually, just literally. Like it's gonna be mostly just like dollars everywhere and then Bitcoin. I think that's the next phase. As these other currencies kind of fall off and are mismanaged. And then I think over time, something that Bitcoiners really love about Bitcoin is the decentralization, is the censorship resistance. That will be more appreciated over time, I believe.
I think it's
As
already
thing
happening.
It's already happening, but
Yeah,
I mean like really appreciated
yeah.
as a extremely unique, valuable characteristic of Bitcoin. And yeah, you're right. It's already appreciated in the regions that have a reason to appreciate it, right? You don't have to
Mhm.
tell them why
Exactly.
that's important.
Yep.
There's a lot of financial privilege everywhere. It's like what we talked about. But you just saw that with the freezing of I believe Tether, right? And this is what it's a centralized ledger that they can seize and they can freeze and they can implement capital controls if a government taps them on the shoulder. And it's not necessarily, Tether's not a bad person. They're working within the laws, but also that's just the function of being centralized. That's why early versions of Bitcoin in the 80s and 90s failed, because there was centralization of the ledger. And so Bitcoin's decentralization and Bitcoin's censorship resistance will shine more and more over the years. And you know, I appreciate it today. And a lot of Bitcoiners do too, but I
Yeah.
think that's the next step for Bitcoin.
All right. So we really don't. This might be the first time ever that we've like legitimately talked about price here. But to that point, um, I'll get a little macro insight. What are your thoughts on what's going on? I have some thoughts of my own, but it is an interesting time. I mean, you know, we basically just completely chopped sideways for an entire year. The S&P hit all new
Mhm.
highs. Gold and silver went on crazy runs. I think Bitcoin's next, but what's going on out there?
Yeah, I think Bitcoiners, especially long-term investors, we like to talk about the fundamentals, and so do I. But price is important. Price is very important for Bitcoin. If you talk to anybody, number go up is the most powerful marketing for Bitcoin, and I think that will always be the case. People like to come to Bitcoin because they like the potential of their savings increasing and it being a good investment. And but I think last year was painful for people because there's a lot of expectations. You know, there's a lot of price predictions for the end of the year, well into the six figures, and so that led to some disappointment. And the relative performance was the problem. I mean, Bitcoin was basically flat on the year, but you wouldn't know it by the sentiment. I mean, it was like it was down 50, and it's because everything else was up 50, like gold and silver. They had phenomenal years, but I mean, I guess that's what it felt like to be them over the last decade with Bitcoin. And we've just been on the other side of that. But it was painful for people because relative performance is important, especially if you're managing portfolios. I mean, it's like, why wasn't I allocated to this? I should, but when I look at the fundamentals, it was maybe the most bullish year I've ever seen in Bitcoin. I mean, it was absolutely insane. So there's this huge divergence between fundamentals and price. I mean, a
Yes.
lot of the things that happened in 2025, I wouldn't have pegged to happen for years in terms of opening up the banking sector to allow them to uh, allocate to Bitcoin or hold Bitcoin on their balance sheet on behalf of clients or develop Bitcoin products and services. All these regulators, the Fed, OCC, FDIC, they all basically rescinded all this restrictive guidance and just opened the doors. You had a strategic Bitcoin reserve get created through executive order. I mean, all this really crazy stuff that I just would have never imagined happened. You have, BlackRock and Morgan Stanley, and they're all recommending like 1 to 3% allocations or somewhere around there. It's just, I thought it would take years to get to these points. And so, the FASB rule accounting changes, like, I can just go on and on and on. I put out a report about this timeline, like, I needed to do a separate timeline for 2025 because there's so many things that happened that were positive developments. And so there is this divergence, and this 30% correction, which I really attribute to more internal market dynamics, meaning the crypto-specific ecosystem had that liquidation event October 10th, which really kind of wiped out the gains and destroyed sentiment, destroyed liquidity, and the market's kind of working itself out of that. It has no relation to the macro picture or anything like that. That just was a function of leverage within that ecosystem that led to forced sellers. And I still think we're like working our way out of that. And there's different dynamics like long-term sellers. I mean, that's very real. I mean, there's been multiple reports at different trading firms, confirming that there are some older OGs that are selling for different reasons, which is normal bull market behavior after a number of years to have profit taking. That's just normally what you see. So you have some consolidation happening. And so that added some pressure, but those are eventually there will be seller exhaustion, and the long-term value proposition or the long-term drivers of Bitcoin's price, which is liquidity, currency debasement, all these things we talked about, more global uncertainty. Those are the things that are actually the long-term drivers of Bitcoin. And eventually they'll take the wheel again. And what I see right now is the world needs Bitcoin more than ever. And so I expect Bitcoin's going to catch up in a meaningful way to gold and to silver and to equities. And Bitcoin has a way of ripping people's faces off. So you'll hear these narratives about how it's underperformed, and then Bitcoin will rip 20% in 3 weeks or something. And then like suddenly they're like, oh, it's, that gap's closed pretty fast. So that's kind of what I expect to happen. You have a lot of different the other divergences in the market that I see is gold and real yields. So gold usually has been historically correlated to yields because gold doesn't have a yield. And so when yields are higher, gold sells off because people are kind of searching for that yield. And when yields cut towards zero, well, the opportunity cost isn't that high to just hold gold. And so gold typically does well when yields go down. But you saw that relationship completely diverge, where gold just ripped up no matter what rates were doing. And what that tells you is that the bid behind gold isn't about rates, it's about uncertainty, it's about long-term concerns about the fiscal outlook, the sustainability, the debt levels, right? Uh the sanctions that were on treasuries, the apolitical neutral nature of gold is attractive in this environment of more the weaponization of the dollar and the treasuries. So it's more about uncertainty on the geopolitical front, monetary policy front, on the fiscal policy front that's driving gold. And the other divergence you see is also what they call the term premium. The term premium is just a fancy way of saying that if I'm the US government and I'm selling 10-year bonds, investors are demanding a higher yield to lock up their money for 10 years to take on that duration risk because all kinds of things can happen over 10 years, right? There can be wars, recessions, money printing, blown out deficits. There's a lot of risk to hold money for 10 years. And if you're buying a 3-month T bill, not so much, right? And so the term premium is basically how much extra return is an investor demanding to hold a 10-year bond, you know, as opposed to kind of a short duration instrument. And that is going up. And there's a lot of reasons why. It can be like inflation expectations. So people think inflation's going up. Uh, why are the long end bonds staying higher despite the Fed cutting rates? That's the abnormal thing. Typically, when they cut rates, the long end follows. But what we're seeing is that the long end is staying high. It's staying sticky no matter what the Fed does. And that's saying that people are saying, I don't want to hold this risk because I don't trust that. I'm looking at the debt levels. I'm looking at the $2 trillion deficits every year. I'm looking at the uncertainty on the geopolitical front. There's more risk. I demand more yield. I don't care what the short end's doing. I don't care what the Fed's doing. And all that points to is just there's more uncertainty. That's the theme. There's more uncertainty in the market, and Bitcoin thrives in that environment. It's anti-fragile. Chaos is a ladder, and as Bitcoin is an alternative system that functions outside that system, that's only becoming more uncertain and more risky in the eyes of investors. They're going to increasingly seek ways to kind of hedge that. And so, I do think Bitcoin's going to close that gap and catch up because actually the only. It's like it's kind of it doesn't really make sense in my mind. And I know I'm biased because I'm like long Bitcoin and a Bitcoin proponent, but like it's one of these macro charts that don't make sense compared to everything else. And I think these other divergences all point to the same thing, which is just more uncertainty.
Well, and
And yeah,
sorry, go ahead.
no, that's it.
Yeah,
Yeah.
and I mean, it just speaks to how early and how misunderstood Bitcoin is right now. That that people haven't realized that, and part of it is, and maybe some even sovereigns do realize it, but they're saying the market's not liquid enough, it's not deep enough. I want gold because I'm familiar with it. We have ways to store it. We have the routes set up to get it, and obviously Bitcoin's much easier with all that stuff. You don't need anything to do that. But we maybe there's some liquidity concerns about the depth of Bitcoin, and we're just going to buy gold now, even though Bitcoin is better. Maybe there are some places that do understand that, but for the most part, people view Bitcoin as sort of a speculative bet on the future or something like that, as opposed to the truest risk off asset, the best thing to own, like you said, during periods of uncertainty. And it's just going to take time for people to realize that. And I still think, the other thing too is, uh, like, the Fed went through the largest tightening period it's ever gone through since 2022, and Bitcoin's still up like 5x during that time.
Yeah.
And that's another thing too. I think people have time frame bias where they just stare at what was the last year, what was the last 1 year chart look like, and it's like, go back 3 years, go back to 22. The world was ending, Bitcoin was dead, FTX had just collapsed. Like, I remember Bitcoin was sitting at like 16K, and half of Twitter was going, oh, it's going down to 8, it's going down to 9. I'm not buying right now, I'm waiting. And then next thing you know, now we're sitting at, I think 97K right now as we're
Mhm.
recording this. And it's like, you know, it, expand your time frame. First principles, absolutely nothing's changed. As this uncertainty increases, um, as the world becomes more volatile, not just assets and currencies, as the world becomes more volatile, there's going to be a search for something that satisfies the lack of volatility. And at the end of the day, Bitcoin is not volatile at all. But its fiat price is volatile, but Bitcoin is incredibly stable. Every 10 minutes, another block's coming. We know the issuance schedule, and that that is comforting to these
Yeah.
these players that are looking for something like that. So eventually they'll come around, eventually they'll understand it. Unfortunately, it's not going to be on our time horizon, but absolutely nothing has changed with the long-term thesis. So
Let's look, Bitcoin can trade like you said, it's almost like a seen as a speculative risk asset still. We gotta be honest about that. Most people still view it that way. I mean, I think it's a safe haven asset. That's how I view it. I think one of the reasons I own Bitcoin is all the risk you remove by owning it. So if I own like an equity or a bond, you take on counterparty risks, business risk, sector risk, management risk, uh, inflation risk, duration risk. You eliminate all these things when you hold an apolitical, neutral, decentralized digital commodity. And so that's what makes it attractive. It's a long duration asset. It's an asset to hold over long periods of time. And I think about it almost like in the lens of evolutionary biology, where things survive when they're adaptable, when they can survive through very tumultuous environments. And the ones that don't are the ones that have weaknesses. And when I look at the weaknesses in assets, I'm really talking about risks. And when you want to hold something for 100 years, you want to hold something that reduces the risk surface and just can survive. That's like the one thing. And so, if Bitcoin didn't exist, I would own a lot of gold, and I don't think it's necessarily a terrible place to be. And I think why gold's outperforming now is exactly what you said. It has a long track record. People understand it. It's already gained the safe haven, label, and there's a huge bid from central banks behind it. And central banks are going to be the last ones to accumulate Bitcoin. And one of the reasons is that when you think about from a central bank standpoint, when they're thinking about what to hold on their reserves, it's a little bit different than say a corporation like Orange BTC or even an individual. They're not necessarily thinking about uh, preserving purchasing power or investment returns or generate passing on generational wealth. That's not what their main focus is. It's more about how assets perform in times of volatility, in times of market turmoil. And lately, because Bitcoin's seen more as a risk asset, it tends to get sold off because it's highly liquid. It's 24/7. It trades on a Sunday night. It's some of the only things that can get traded. And so during times of market crisis, it tends to sell off with everything else. And then usually it bounces hard off that. But from a central bank standpoint, they don't like to see that because when they have reserves, their point is that they want it to hold its value in those times so that if they need to sell the reserves to prop up the local currency or to prevent capital flight or to just smooth markets during those crises, they can't have a reserve that's also down 30% during that time. And so that's what I mean. It's just like central banks kind of think a little bit differently about what their priorities are when they consider a reserve. And so until Bitcoin is broadly seen as a safe haven and it shows more resilience during market volatility, I don't see central banks adopting it. I mean, right now we have the Czech central bank
uh,
doing a test pilot for diversification, and maybe you'll see a few on the margin start to make small allocations here and there, like tiny. But again, until Bitcoin shows that it could hold its value during times of market crises when it's seen as a safe haven, that's when you're going to start to see like central bank adoption. And even then, I mean, it sounds weird to me to say like central bank adoption of Bitcoin. It's almost like it doesn't really, compute in my brain. But eventually, every institution is going to hold Bitcoin because every single government, central bank, institution, corporation, individual, uh, they all need digital capital, and so it's only a matter of time. But I think that they'll be some of the last adopters.
It is very interesting to think about the conundrum of a central bank adopting Bitcoin. It's basically like they're adopting the thing that's going to kill them, but they also don't have a choice. Like it's it's like it's like knowing you're 5 moves away from checkmate in chess, but like you still got to play the next four, and
Well,
it's
they're so concerned about stablecoins, and for good reason. So the Bank of International Settlements is the central bank of central banks. They're like an international financial institution that coordinates with all the central banks on policy and
everyone should go
uh,
read the Tower of Basel, by the way, if you want to learn more
yeah,
about
yeah, it's a
MBA.
great
Great
book.
book. Yeah,
Great book.
yeah.
Um, but I've been reading their stuff for years, and just signs about digital assets or Bitcoin or stable. Like I just kind of keep track of what they're thinking, and they always just brush off Bitcoin. Like it's still they're just like, well, Bitcoin's that's not real money or something. Like, but stable coins are a real threat. Like stable coins, blah blah
Yeah.
blah. I'm like, you guys, it's like you're not even seeing it right now. So and like stable coins are a threat to them but
Of
like
course.
not as big of a threat as Bitcoin. And it's long past due because I think central banking has been bad for society.
Yeah.
It has
It's
created a lot of boom bust cycles and
unequivocal.
instability, and it's and people kind of think that they're needed to smooth out the business cycles and stuff like that. But we've had even in the last 30, let's see, almost 40 years, we've had like once in a yeah, I think once in a thousand-year events, like it's like the 1987 crash, and then the dot-com crash, global financial crisis, and now you have like the COVID pandemic, obviously.
Even
But those
but
are happening like every 10 years now because they create these boom bust cycles and this access, the fiscal excess that they allow, and now just it's not. I don't know if they haven't been a net positive to society. And this is what Safety talks about in his early book. He talks about the gold standard of how the ability to save and to have some kind of constraint that's based in the physical real world on money printing and how it leads to better allocation of capital, which leads to more innovation, which leads to more prosperity and a higher quality of life. And I believe all that stuff, and I think we've kind of gone off the rails here, um, especially since 1971. And then people don't realize like it's a complete experiment, this fiat experiment since 1971, this free floating fiat experiment. I mean, Bitcoin 17, and I do the math in my head. What 1971? It's like not that much older than Bitcoin, the
5 years.
system
Yeah.
that we have.
Yeah.
Yeah, so it's like
Yeah. Fiat
Bitcoin
is
is
the
showing
aberration.
fiat's the aberration, and like I said before about that IMF paper, the track record of fiat since 1971 is one of instability, massive currency devaluation, and the track record of Bitcoin since 2009 is the opposite, one of stability and one of wealth preservation instead of wealth destruction. And so, like, yeah, I think that's going to be fun when Bitcoin actually, uh, you know, continues in contrast to the fiat system, continues to show that like there's a better way to do things. And technology has enabled us to do this. We've engineered this amazing system. and it'll just become more appreciated over time, especially in contrast to the failing fiat system.
It'll be impossible to ignore. And you know what? That's my job. That's your job. That's all of our jobs. Those of us working in the space, trying to get the word out to people. So, uh, unfortunately, I have to go run to go do a legacy boomer media interview here. But uh, definitely could keep going here, but it's like a blizzard here in Chicago, and I got to go out and
Uh-huh.
brave these conditions. So, um, Sam, thank you so much for your time today. Where do you want to send people to learn more about Orange BTC, about yourself? Where can they check out your work?
Well, I'm always on Twitter. I'm at Sam Calla, SamCallah. I'm always posting charts and analysis and just my thoughts. So you can go and follow me there. If you want to learn more about Orange BTC, you can just go to orangebtc.com. You can always reach out to me via DMs. Happy to answer any questions. And yeah, just thanks for having me on. It's always a pleasure to talk to a Bitcoiner,
Yeah, I was.
fellow Chicago guy too.
Yeah, it was. I got to meet you in Prague, and then we sat on a panel together out in Denver at the Financial Services Summit. So it's been great getting to know you and great getting to
I
chat
got
with
these.
you.
I got these in Prague. This is,
Yeah,
I got one too.
I actually gave those. I got a couple of those, and I gave them away as presents for people. So, what's the name of that brand again? Someone asked me the other day, and I forgot.
I don't even. It says mitochondriac,
Mitochondria.
mitochondria,
Yeah.
mitochondria. It's just spelled weird.
No, it was. Oh man. Oh, I still don't remember the name. But anyways, they're the people I gave them to love them. So I love them too. They just make me not have a
Do you think
headache.
they? Do you actually feel like they help?
Oh,
Like,
100%. It is.
yeah,
I used to get headaches. I used to start to kind of feel nauseous, like if I was at the screen for a long time or at the end of the day. And I notice it especially at night when I put these on. Like I just feel my body go like just calms down, like the agitation levels. If I'm watching TV or like got some bright lights on or something, like my I just get very relaxed. And so
yeah.
yeah,
I agree.
yeah,
I've noticed it too.
yeah, it's real. And I always joke that I was with my wife and she was like, what are these? What are you doing? I go, try them. And she put them on. 15 seconds later, she was like, what's the website? Where'd you get those? I'm getting a pair.
Really?
So,
Oh
yeah.
wow.
So, and I've done that. I did that with my dad and my stepmom, a couple friends of mine. Same thing. They put them on like 20 seconds later. They're like, that was incredible. Where do I get those? So,
Word.
yeah.
Well, thanks for having me. I appreciate it.
Yeah.
And
Thanks, Sam.
yeah,
Really appreciate your time as always. The Sovereign, you can find us Sovereign SOVREIGN.io, Sovereign X on Twitter. Follow us on LinkedIn. I run the Nostra account very poorly. We're on there as well, where I post these podcasts, and I'm plebe on Nostra as well for people that want to follow me personally. So thanks everyone, and until next time.